weekly risk events video for the week beginning June the 15th, 2015. We're going to begin with Monday, of course, Monday, June the 15th. Basically, there's not a lot going on, not a lot of market moving information. Now, before we get into the week, we've got a lot of stuff kicking off, a lot of things happening that really could be potentially market moving. And we're going to talk about why and what each one of those are. But the beginning of the week, kind of Monday time, Sunday, Monday, not really much going on, not really many things that could move the markets. We've got a couple of potentially high impact events. We've got manufacturing sales from Canada. We've also got ECB President Draghi speaking, but not really expecting too much from those guys, or Draghi and the data from Canada. If we go to Tuesday the 16th, we can see the day begins with monetary policy meetings from Australia. Again, not really expecting too much from that this week. The biggest event of this day, of course, is UK CPI. And UK CPI is a massive factor at the moment, a big mover for the pound. And the reason is simple, because the Bank of England now expect CPI to start getting higher. Now, they don't expect it to get much higher. They don't expect it to take off like a rocket or anything like that, but they expect it to be back into positive territory and improving month on month, okay? Now, that's important because if that happens, that's basically the next step towards the Bank of England rate hike, which is expected to come towards the end of 2015, beginning of 2016. Now, as you can see here, the economists also expect UK CPI to get back into positive territory with a reading of 0.1%. The previous, if you remember, was deflationary of negative 0.1%. Now, that was okay because the Bank of England said they were kind of expecting that. So the market didn't really overreact to that. There was a little sell-off on the pound, but it wasn't anything major. Generally, the pound was quite buoyant, because everything is theoretically still on track. So this reading here is the first really big UK CPI reading of the year, because this is the one that needs to turn positive and it needs to stay positive from this point on. If we don't get positive readings and we get negative readings, that could be taken quite badly by the markets, who will then start to think that the UK rate hike maybe is not going to come anytime soon. Maybe it's not even going to come in the next 12 months if inflation isn't recovering as the Bank of England would like to see. So this is a really big event. If it does recover, of course, everything is on track. That's positive for the pound. If it doesn't, that's really negative for the pound. So I think there could be some moves off this either way, and that's just the background to that, so you understand why it's quite important and basically how you can trade it. So if it comes out quite positive, we could look to buy pounds going into the next data set, which I think is Wednesday or Thursday. We'll look at that in a moment. Basically, we've got average earnings coming out from the UK. So in between CPI and average earnings, we can trade the pound. So if it's positive, we can look to buy the pound on the dips. If it's negative, we can look to sell the pound on those rallies, going into that average earnings figure. Now, later on in the day, we've got European Court of Justice ruling. This is, of course, to basically determine whether the outright monetary operations, the OMT programs that the ECB have been running, are in fact legal or related. Of course, related to that is their QE program, etc. So all the stuff that they've been doing to try and stimulate the economy, there's going to be a ruling on whether that's legal, whether the ECB can actually perform those functions. So it's going to be a pretty interesting. Most people are expecting it to come out kind of unscathed. Everyone's expecting it to be kind of a fairly standard ruling. But if we do get some surprise there, that could be and it impacts the way that the ECB can actually handle the economy and stimulate the economy. Basically, if they rule in such a way as to hamper the ECB, then that could have quite negative consequences for the euro. But it's not something we're expecting, but it's definitely worth something to keep an eye on. Then, of course, we've got German's EU economic sentiment. This is expected to tick lower. The current situation in Europe is not the best. Obviously, the Greece crisis is taking up all the headlines. So this is again, it's not really a massively tradable thing at the moment because of the other stuff that's going on. We've got the Greece situation. We've got the ECB performing QE. There's little picture and big picture things going on that are much more important than individual data sets from Europe, but they still are worth keeping an eye on just to see how it all plays out. But it's not really tradable. We've also got US data. Friday we had a couple of data points on the US, minor data points. Didn't really move the markets. I think the data came out pretty positive and the dollar sold off. So there's nothing. The data's being less and less driven by these lower tier data points now. Not really expecting building permits to have massive impact on the dollar. And then, of course, we've got New Zealand GDT price index. Now, the Global Dairy Trade Price Index is not released by New Zealand, but it does affect the New Zealand dollar, of course, because it obviously reflects milk prices, and New Zealand's GDP is made up of 7% of it is made up of milk, basically. So it's a pretty important figure for the New Zealand dollar. Now, Westpac Bank recently said over the weekend that they believe that if GDT readings continue to show a negative trend, this could mean more rate cuts from the RBNZ because it has an impact on inflation. Inflation's dropped and dropped and dropped to really below the lower level of their band. So last week the RBNZ acted, they cut rates, which has weakened New Zealand dollar a little bit. We expect that weakness to continue, selling New Zealand dollar on the rallies for now. And of course, if the GDT comes in negative, that could also provide fairly good selling opportunities as well, off the back of that, in relation to GDT, negative GDT prices leading to yet another RBNZ cut. That's the theory. So this now places quite a lot of interesting importance on these GDT index figures. So keep your eye on that. If it's negative, could give a good trade opportunity. There's no expectation for these things. They're just an auction. They come out as they come out. But it could be tradable, especially in the current environment of New Zealand dollar, in which we are selling it due to its weakness after those RBNZ cuts. Now, if we go to Wednesday, June the 17th, this is another massive day of the week, probably one of the biggest days, in fact. In the beginning part of the day, we've got all the figures from the UK. We've got claimant count change. We've got MPC official bank rate votes, where we're expecting that to stay 9-0. We've got unemployment rate, which is a little bit more important than the medium impact as it showed there. It's expected to come out 5.5, but the biggest one, of course, is average earnings index. This is expected to grow significantly to 2.5% from 1.9% previously. And if this follows a positive CPI reading, we could see really nice moves on the pound, and we definitely want to be buying the dips on that thing against the weaker currencies. Think New Zealand dollar, stuff like that. Just match it with the currencies that are currently weak. If we get fresh reasons to buy the pound, it could be a really great opportunity to make some pips. Obviously, the reverse is true. If the data comes out worse than expected, it's going to be hit the pound hard, particularly the CPI, particularly average earnings, because they're the two things that the Bank of England are looking at in terms of judging when to hike. They want to see good improvement in wage growth and the jobs market, but they also want to see that inflation figure up, of course, because that's their main mandate. So that's going to be a big section. Exactly the same market reactions we talked about with CPI. If it's really good, pound should rally. If it's really bad, pound should sell off quite hard. In fact, the sell-off will probably be bigger than the rally, just because of what the implications are, and in terms of what the market's currently expecting. Later on in the day, we've got final CPI and core CPI from the Eurozone. Again, not really expected because it's like second or third data set, I think, from CPI. So everyone's kind of pretty much knows what the CPI figure is in Europe. Not really expected to change. This final one's just kind of like the icing on the cake. So not really looking for that to create any kind of unexpected moves. Then we've got wholesale sales from Canada. Again, this is expected to come out worse, just like the data on Monday. It's expected to come slightly worse, 0.3 versus the previous 0.8. Again, not really looking to trade this. It's not really market moving. In Canada, the big ones, of course, are GDP, CPI, and employment. There, as with any central bank, that's probably what's going to get the Canadian dollar moving. And of course, any words or comments from the Bank of Canada, which we haven't really had a lot of just lately. Now, the big one event, like later in the New York session, of course, coming up, is the FOMC statement. We've got the funds rate, the statement, the press conference, and also the economic projections. How are the Fed feeling? What are they thinking? What are they looking at? This recent run of big data, positive CPI, good NFP, good wage growth, average earnings. All this is going to start to get the Fed thinking. What are the Fed going to do? Also, just a little note, this is June. This is the June FOMC federal funds rate announcement. And remember, there is a little bit of speculation that maybe the Fed could hike in June. Remember, that was one of the dates that was mentioned as a realistic possibility. That's kind of gone off the table in recent months. No one's expecting them to hike in June, but it is worth just keeping half an eye on it, because the data, in terms of what the Fed have said, has been pretty good. There's not really any massive reason for the Fed not to hike, other than that inflation's not quite where they want it to be, although it is continuing to get higher and stronger. So there's an interesting argument there to at least keep an eye on it, because if the Fed do hike, the dollar will just absolutely boom and rally for not just an hour, but days. Okay, so this will be a great opportunity to keep your eye on that and get into a trade buying the dollar to make some pips, because it will be very, very unexpected. Everyone's currently pricing in, I think the market's currently pricing in October or December as the first rate hike, but it is June. This is the first realistic possible date that was given by the Fed, so it's worth keeping an eye on. Obviously, we don't expect that to happen, but definitely worth mentioning, because if there's pips to be made, if it does happen, we want to know what to do. We want to know how to play it, and this is definitely something we want to play. And also, it's worth mentioning because it's June, and because obviously that's been bandied about in the past as a potentially realistic rate hike date. Okay, so just keep your eye on that. And then, of course, we go to Thursday the 18th. We've got, again, some pretty big things going on here from around the world, in fact. We've got SNB monetary policy assessment. Haven't heard from the SNB lately. Kind of want to know what they're up to, what they've been doing, what they're thinking. Are they still intervening? The Swiss franc probably isn't where they want it to be. It's probably a little bit stronger than they would like. It's interesting to see what rhetoric they use. Last time they spoke and said anything meaningful, they basically said, this is a few months ago now, that they are confident the Swiss franc will weaken, but they're also confident that the market will pretty much do the work for them because they'll come to their senses and realise that it's not worth buying as the market has been. Now, obviously, that's ridiculous, and ever since they said that, the Swiss franc, of course, has strengthened as the market is sensing weakness in the SNB or a lack of appetite for battle in the markets. So that those guys who want to buy Swiss francs as a safe haven play, they can buy it away with no real fear of the SNB doing anything major. Now, the LIBOR rate obviously is at minus 0.75%. Not expecting that to change. It's the lowest interest rate in the developed world. It's very unattractive for holding. It just indicates how, what kind of environment we are in at the moment when it's really attractive to actually lose money holding something, but it's safe rather than risk losing a lot more by holding something that's quite volatile, like, for example, such as the euro. So this is a very interesting situation going on with the Swiss franc at the moment, and you really want to be paying close attention to what the S&B say, because that could dictate the moves over the coming weeks. If they show that lack of appetite to get involved, again, we could see more Swiss franc strength. Whereas if they come out all guns blazing and do something, maybe make another cut, or maybe give some real clear guidance about what they're going to do and how they're going to stop this, then again, we could see the opposite true. We could see the Swiss franc sell off. So very interesting thing to watch out for. There is a chance they might not say anything new and it'd be a bit of a non-event, but it's definitely worth keeping your eye on. Later on, we've got UK retail sales expected to tick lower, 0% versus previous 1.2. Again, retail sales not a massive one, and it will depend on what's happened with CPI and average earnings earlier in the week. But if it's all been positive and this one comes out, above 0%, again, could be, continuing to buy the pound of the dips. This could be a positive one as well. We've also got the targeted LTROs from Europe. Again, this isn't so much of a factor anymore since they of course launched their QE program. So not really anything the markets will be paying too much attention to. We've also got the Eurogroup meetings. Again, not really anything new or fresh that can come out of Europe at the moment while all this is going on. And of course, in the short term, everything's just dominated by this Greek story anyway. So all this stuff is kind of taking a back seat for now. Now, later in the day, we do have US CPI. This is expected to tick much higher, 0.5 versus the previous 0.1. Core CPI is expected to tick a little bit lower to 0.2 versus expected 0.3. Now, the reason CPI is expected to start getting better from this point around the world, of course, is the relation to oil. Oil prices by this point, have started kind of to stabilise. So with a year-on-year comparison, in fact, if oil prices start going up over the next, which they have been obviously over the next few months, we actually should start seeing inflation get pretty good over the course of the summer into August to September, based on what oil prices were doing a year before. So actually, inflation is expected to turn around. So the core is still pretty important, but the headline will start having more influence as well as those weeks and months go by. This overall is fairly positive for the US dollar. It's a big one. Obviously, CPI is the big one. If we get a positive deviation, that could see dollar rallies. If we get a negative deviation, again, that could see a nice big sell-off on the US dollar, at least in the short term, as that impacts, obviously the Fed's decision. And of course, by this point, we'll have already had, the Fed's economic projections and the press conference and their statement. So we'll have a lot more information on what the Fed are thinking in terms of rate hikes. But as we stand right now, US CPI is a pretty important one as well. And the fact that the CPI comes out kind of overshadows unemployment claims and the manufacturing index from the Philadelphia Fed. So those things not too important when compared to those CPI readings. The final day of the week, of course, is the 19th of June, and we have got some fairly important data. Every day really this week, apart from Monday, every day has got some pretty important data in it that could be potentially market moving. We've got monetary policy statement from Japan and the Bank of Japan press conference. No one's expecting the Bank of Japan to add to their QE program at the moment. It's worth keeping an eye on all these events. We've been keeping an eye on these since March, but the language and the rhetoric from the Bank of Japan has been so far that it's not broke, we're not going to fix it, everything's recovering fine, arguably except inflation, but we think inflation over the summer, just like around the world with the UK and the US and everyone else, we expect inflation to get better through the summer. So I guess we need to watch a few CPI readings from Japan to really get a good gauge of whether or not they're going to have to do something. But for now, all the market expects that this will kind of be a non-event and nothing will happen. But as I've been saying since March, I think it's worth keeping an eye on this, because the Bank of Japan don't have to tell people what they're going to do before ahead of time. They can just justify it quite easily in the statement and press conference, and an announcement could come at any one of these to suggest that they're going to do a third round of QE, which of course will weaken the Japanese yen significantly, possibly making dollar yen hit 130. So there'll be plenty of pips to make. This is another one of those events where if you're in a time zone that's kind of conducive to trading, this kind of event, kind of early hours, in the London time, so it's probably like 3, 4, 5 a.m. London time. It's obviously no good for me, but if you are in that kind of time zone, it's worth keeping an eye on this because it potentially could create a nice pit-making opportunity. We've also got Canadian data later on, core CPI and retail sales, pretty big for Canada. These are fairly big data points. Of course, CPI month on month expected to tick higher. If this ticks lower, Canadian dollar could weaken significantly. And of course, retail sales will be important too. So this data set here could actually get Canadian dollar moving potentially if we get a deviation, basically. So that's the week beginning the June the 15th. Lots of stuff going on. Lots of key risk events that you want to keep your eye on. Of course, keep your eye on the feeds. There'll be we'll post research. We'll post trade plans for all these things. So you'll be fully prepared. And of course, that research and trade plan will factor in everything that's going on in the here and now. So have all the information. That's the best way to combine this. Watch this risk events video as an intro, and then of course get the trade plans and the research, so you can actually make pips from the event themselves. So do your preparation. Don't forget to do your research.